Hello, going to do a quick trade recap on the dollar yen. Um, Most recently, we've kind of topped out here and have been slowly making, lower lows and lower highs um, after a large impulse move here, towards the latter part of 2016. And if we just kind of do a basic chart markup here, we have a channel forming. Um, Within this downtrend that's kind of making our lower lows and lower highs. And we just this past week had a test of the channel bottom. And depending on how you draw your fibs, whether it's from this true low or kind of this impulse move general area here, um, the 50% or the 61.8 fib retracement's right around there. If you take this low here, that's the 50% or this impulse move, which I typically prefer to do it that way to kind of capture the true move, the true starting point of the move. And the 61.8 fib retracement's right there. And off that, off this general area down here, price put in a nice daily candle pin bar reversal, if you pay attention to that. Because I'm kind of getting more into some swing trades or hybrid swing trades or whatever you want to call it. I've been trading off of kind of the daily chart, the weekly charts, looking at the weekly candle closes and, doing that type of thing. And also because I'm so used to using pretty tight stop losses, I've kind of gotten into waiting for more confirmation around the general levels that I've been looking at. So this past week I was watching this trade kind of materialize or potentially materialize. And let's see, on the 17th, which was last Monday, so almost a week ago, it put in a nice pin bar reversal off of, this little general area here. So I was kind of potentially watching for a long opportunity off of these levels here. And I did so I did that basic analysis on the daily chart, and then my entry was on the 4-hour chart. As we put in that daily pin bar reversal, which is kind of encompassed by these few candles here, we put in a higher low on the 4-hour chart. So you can see here, if we do a little bit more analysis on the 4-hour chart, we're kind of doing a little wedge pattern here, which is one of my kind of favorite types of patterns to trade. We can see we have a low and then it's just kind of consolidating in here. Well, on Friday, Thursday or Friday, it broke out of this wedge to the upside. So that kind of gave me a little bit more confidence in looking for a long opportunity. So what I did was, we had that daily pin bar down here, and then on the 4-hour chart we had a nice pin bar rejection from these kind of lower levels here, which stimulated the breakout. So I fibbed that little impulse move there. You can see it better on the 1-hour chart, but I've kind of been doing most of my stuff lately on the weekly, daily, and 4-hour charts. This little impulse move here broke out, went sideways for a little bit, caught some resistance off of this little consolidation point here, and then slowly started to retrace. And you can see this large bullish candle here. That looks like beginning at 9 a.m. on the 20th, which was Thursday. So Thursday morning had a large bullish candle breakout, and then slowly trickled its way back down to around this 20 EMA in these general levels here. So as it was retracing, I was looking for an entry opportunity, and I ended up getting long right here at 107, 109.074. I entered at market. I believe it was after retesting. I meant to enter at the trend line, but it had a pretty strong pop up. So I just entered at market. It kind of started rejecting higher off of this trend line and this little breakout consolidation point here. So I entered at market. I placed my stop just below that kind of pin bar on the 4-hour chart that stimulated that breakout of this wedge. I felt like if it kind of got back down there, then it would continue on and probably potentially, retest the lows. So I just wanted to get out, maybe reevaluate. And that ended up being, I think, right around a 40 pip stop. So I haven't been trading much more than my usual 20 or 30 pip stop. But yeah, I don't know. I'm still trying to hash out the best way for me to go about swing trading or holding positions for more than, an hour or so or a couple hours. So this seems to be working for right now, so we'll see how it ends up. Obviously, the safer bet would have been to place it, below that low of the daily candle, but I'm not super comfortable with that amount of risk yet. That would have been, almost 100 pips. If you put it below, probably right around 100 pips, which that's kind of a lot for me right now. I haven't gotten to that point in swing trading where I have that large of a stop. But anyways, a little bit of drawdown. It was kind of, back and forth. If you drop down to a 1-hour chart, I think it was actually after this candle here. This was kind of a little pin bar candle on the 1-hour chart by itself. Although it closed bearish, it did have a pretty nice sized wick to the bottom, retesting these levels that kind of broke out of that point. So I just went ahead and kind of entered that market, put my stop below that 4-hour pin bar, and target wise, you can see the target I had in mind was just below or just right around this last breakout point, or breakdown point that it broke out of. We'll kind of make this easier to see on the 4-hour chart. You can see this shelf of support right around this general area here that it tested many times before finally breaking down with a large bearish candle, and then kind of retesting here during this consolidation period before continuing lower. So I felt, that was a logical place for the buyers to want to take it to, before potentially, exiting for a profit or whatever. It's all market psychology, right? So that was the last breakdown that the buyers failed. So that would be, if they regain control, that to me is a logical target to look at. That had a little bit of confluence in of itself there, fib wise, or target, using extensions as targets. The 61.8 was right up around that area as well. So that was kind of where I was targeting. I left my stop where it was. The market closed. I was just barely in profit when the market closed, by just a few pips. So I just left it where it was and let it ride out. I was either going to get taken out, you know, on my stop, or even maybe a gap down, or taken out at or my target was going to be hit. So the market opened, and you know, as soon as it opened, it was above my take profit anyway, so I just went ahead and closed it out. This was let me bring this up here, about a 144 pip trade. So yeah, I entered right there on Friday, and this is where I closed it out. So most of this time was just over the weekend hold. So not a bad little trade. We have actually came back down and retested this area and had a nice little pop up off of it, but we've since come back down and are kind of sitting back down in this area here. You know, with these large gaps, you know, you can see gap fills. You know, people trade just look for gaps and trade the gap fills because it, you know, markets are driven, and you know, there's a lot of probably orders sitting around here. I'm not entirely sure how all that works, but so there's the possibility of it coming all the way back down, essentially to my entry point, and filling that gap before maybe continuing its move up, or you know, even continuing down. You know, because this isn't a bad place to hop on a trend continuation trade. You know, it's back up into previous structure. If you're still short biased on this, which you know they say the trend is your friend, that would be a stellar place to enter the trade in anticipation of the market moving lower. You could place your stops up here. I'm not in anything right now on this. I'm just going to let it play out probably Sunday night, maybe tomorrow, to see what happens. If we don't end up filling this gap and you know the proper signals or whatever you want to see start coming into play, you know, around this level, I may look to enter it to potentially take it back up to the channel top. You know, around, you know, 112, 113, depending on where that peaks out at. It's doubtful it'll just tail up there straight up, you know, tomorrow or tonight, but we'll see. It may be a gradual thing. Who knows what's going to happen? But this was the trade and the analysis behind it, why I entered the way I did, and where I exited or had planned to exit. If you have any questions, let me know, and I'll talk with you later.